The Mumbai NCLT, while accepting SBI's insolvency petition, asked the resolution professional to treat the Jet Airways account with extra care, a reflection of just how much the grounded airline matters to the system, be it the creditors or the employees who are yet to receive their salary, or the government, which is working hard to try and maintain capacity. The big question here is whether there is any value left in the country's oldest air carrier, something that can lure a prospective bidder and have peers or already moved in to capture and fill the gap left behind by Jet Airways. Let's ask aviation expert Amrit Pandurangi, who joins us right on the phone line from Bengaluru. Amrit, good having you. Thanks much for joining in. Nothing unusual, I reckon, in what happened yesterday. Yes, a fortnightly report, progress report in 3 months instead of 6 months. It's, in a manner of speaking, a systemically important airline which is now being taken into NCLT. Your initial thoughts?
I think it's an unfortunate situation, and as has been advised, it has to be handled with care because it is too important an issue, not only within the aviation industry, but as a signal to the overall economy of how it is handled. Having said that, I think it has to be handled in a very professional manner like any other case. There is value. You did mention about is there any value left. In my view, there is a fair amount of value because of the network that it still has, because of the slots that can be given back to it, which have been taken away temporarily, because of the brand name that it still carries. A lot of passengers who probably have not been flying jet in the recent past may certainly come back if they know that it is being managed well by a reputed management company. So there is a fair amount of value for the brand, for the slots, for the network, and indeed for the experienced employees who will happily come back if they are paid their salary and if a good management is in place. So in keeping these in mind and the fact that we don't want to have somebody having 60-70% market share in the industry, it is important that it is handled with care, and I would say it is handled quickly, not take a long time to close.
I'm wondering from a perspective of a bidder. I think you made some fair points. Yes, the brand is there. I've heard enough people on social media say that they miss Jet Airways when they fly abroad, so on and so forth. But I'm just looking at pure numbers, Amrit. 16 aircrafts, roughly 1,500 crores worth of jet privilege program assets of sorts. The land under JV with Godrej Properties, but that's a JV. We don't know when it gets fructified. So hard assets versus the liabilities that it has, there seems to be a big mismatch. For a prospective bidder, would he be enticed into coming in at the current valuations or at much lower valuations from a stock perspective or from a value perspective?
No, if you go surely by the numbers, it's very difficult to find somebody who is willing to give any worthwhile, decent number for the completely depressed statistics that you presented. But as I said, the intangibles, the brand name, the reach, the slots.
So therefore, sorry to cut you, but that's my question then. Do you reckon that because, there are two forces at play out here. One is these hardcore numbers and statistics that I was alluding to. One is this soft approach, right? Oops, I think we've just lost Amrit Pandurangi. I think the question that I really wanted to know from him was that could there be, at what point of time would he believe that there could be somebody who would come in for buying out Jet Airways? What's the pace at which it could happen as well? Because until then, the shareholders are left in a bit of a limbo. Remember, the consortium let go of the only bid that came in because it was asking for a steep haircut. I think 90-95% haircut. Now, could there be, because of the soft intangibles that Jet Airways have, could there be a bidder who would come in and at a slightly better term come in and make the bid? Amrit, that's the question really. One is the hard statistics which are not in favor. One are the soft numbers or soft aspects which are definitely in favor. Do you reckon that at a slightly better set of terms than the only one conditional bidder had come in, Jet Airways could find a suitor and could find a suitor earlier than the 3-month timeline or the 6-month timeline?
It is possible. But as I have mentioned earlier, Jet Airways needs to be marketed to potential investors. It is not a bidding race where you have three fellows lined up like a beauty parade to select one. But you have to market it, and that you will be the bankers led by State Bank of India and the government. It cannot be a deal where, we say we are public sector, we have to worry about CAG, so we will have a standard bidding document, we will not discuss with bidders. That process will not work. So my view is that it has to be marketed. It is possible to market with all these. It is possible to sit down with a serious investor, negotiate across, and have formal approvals by the cabinet, by the board of SBI, whoever, to go through this process in this manner so that they are not worried about the CAGs of the world.
Okay, in light of the other aspect, now this is one, which would mean a radically different approach than what the lenders consortium has taken until now. And we don't know how quickly they'll move there. In the absence of that, and Jet Airways is not getting revived in the same pace that you and I hope for, what happens to the space at large? I heard you mention about and rightfully so, the concerns about one airline having a 50, 60, 70% dominant share. Do you think that's where we are moving towards if Jet fails to revive?
That is a general trend if you look at the market share numbers over the last few months. And I think government will have to come down and say, look, we don't want anybody to have so much market share. And therefore, what are the ways and means of dealing with that situation? And there are some examples from around the world of how to deal with a dominant 60-70% market shareholder. So they'll have to start looking at those options. I do hope that such situation does not arise, but the government should not be hesitant to take the lead in dealing with that situation well before it becomes a 70% market share.
There is talk of sailing or selling with a renewed focus the Maharaja as well. How likely, how quickly, what kind of suitors, Amrit? Your smile says it all, but let me hear it from you as well.
I don't know. That's a different cup of tea altogether, very, very complex. And even in that case, I have always maintained that it needs to be marketed very, very heavily. It had to be marketed earlier, but now it needs to be marketed very heavily. Air India also has some advantages still left. Most of it is soft in nature. But the government has a better say, a better reason to aggressively market it. If government tries to help in marketing of Jet, some opposition fellows will shout. But if they try to market an Air India, nobody should shout. So that way the government has an advantage that they can do very heavy marketing. And they should attempt it because we do need a national carrier, however, whatever be the background. And so they need to do it. And also it will help in market share calculation that I mentioned earlier.
Yeah, I was actually coming at it from that perspective. They've done some good work, Air India. A couple of my colleagues have flown recently and they had very good things to say about it. But I have points taken. Amrit Pandurangi, thank you so much for taking the time out and speaking with us today on Bloomberg Quint. Well, it's difficult to guess really which way this will shape up. From an equity shareholder perspective, for people who are viewing in right now, just keep in mind that there's a technical factor out here. June 28th or June 27th is when the price will be, what the derivative price will be, and the contracts will be squared at that point of time, and then gets into T2T. Okay, the other big news is Aurobindo Pharma. Get that stock up first. The company's gotten a warning letter for its API manufacturing facility at Srikakulam, Andhra Pradesh. The letter comes following the US FDA inspection of the site in February 2019. We do not have the details of the issues raised by the drug regulator, but the company claims that the existing business from the plant won't be impacted. The management assures investors that it's committed to resolving the issue at the earliest. Joining us right now to talk about the development is Amey Chalke, research analyst at HDFC Securities. Amey, thank you so much for taking the time out and speaking to us at Bloomberg Quint. What do you make of this? The market doesn't like it. The stock is down 6.5%. What's your verdict?
Yeah, I believe on standalone basis, if you look at only the warning letter to Unit 11, there is not much impact. However, there could be some sentimental impact because there are still 2 units where we are expecting outcome from US FDA.
Okay, and this puts a spanner in the wheels for that.
Yes.
Okay. There was also some talk, Amey, that about 25% of Auro's ANDAs for pending approval were linked to these sites, even though there were no meaningful approvals expected in the near term. So this delay in the resolution of the plans, will it impact growth rates?
No, it won't, because typically it is easier for you to switch your API source, and which could be achieved also within 6 months, 3 to 6 months. So I don't think so it will impact their growth rate on account of this warning letter.
Okay. The other view also was that if at all there is an impact, it's impact for launches in FY21. And near term, immediately, majority of their products of the plants are for captive consumption and therefore will not have a dramatic impact. Would that be a correct assessment?
Yes, because and even if there is a warning letter, they can continue to sell their existing products, no? So that should not have any material impact on this.
So then what's the verdict, Amrit, before we wrap this up? I mean, this 6.5% weakness, would you be a buyer into that weakness or would you stay on the sidelines?
I believe over next few days it will recover, but we are still awaiting outcome of 2 other plants, Unit 3 and Unit 1. So one should wait for this regulatory uncertainty to go off, basically.
Okay, wait for the uncertainty to go away. Amrit, great having you. Thanks so much for taking the time out and giving us that very quick perspective on this piece of development. For Aurobindo, the stock is down 6.5%. The market, by the way, is down about 0.4, 0.5% as well. The Nifty Bank, 148 points in the red. It's not turning out to be a great first day of the new series. Let's see what happens during the course of the day. It's a wrap on this leg of Indian Open. Thanks so much for watching. Up next is the FNO Show.